Our next guest says the current market rally is one that most people just don't like very much. Nonetheless, he says clients are more bullish on Bristol-Myers Squibb, Palo Alto Networks, and Chevron, and more bearish on Qualcomm, Target, and their iShares Silver Trust. Joining us right now is JJ Kinahan. He's the CEO of IG North America. First of all, JJ, explain, and by the way, JJ Kinahan, you've got to have some
right? My parents and 3 oldest sisters are from County Offaly, and then the 5 youngest of us were born in Chicago.
Okay, so you come by it very directly and honestly there. JJ, why do people hate this rally so much?
Well, I guess it's the rally that, the path of least resistance almost is up. It's really interesting to me, Becky, that as we hit all-time highs, think about in the past when we've done it so much. You've heard people talking about it everywhere you went, not getting that sense at all that everyone is, oh, okay, I'm missing out. There is not the sense of FOMO, if you will, that we've seen in the past. And so with that, everyone continues to be really nervous around this rally because the inflation numbers aren't backing off. Employment has been good, but the numbers themselves may have been good, but we keep seeing revisions down, and the jobs we're seeing created aren't necessarily careers in many cases, but truly jobs. Not that you can't make careers out of, working in restaurants and things like that, but at some point in our lives, most of us have probably done that and tried to move on to something else. And so I think because of those two things, it continues to make investors nervous about what the next step is. Yet, we continue to see so many of the stocks, you guys just talking about NVIDIA, of course, continuing to just outperform in amazing ways.
I guess this may be different that so many people still hate it on the way up, or is this just early? I'm trying to figure out if this plays out like a normal sort of rally and chase the rally. First you hate it, then you figure, oh my gosh, it's the fear of missing out does kick in at some point, and then you chase it and go along with that. I mean, there's a lot of money on the sidelines. You think we're just really smarter this time around?
I don't know that people are necessarily, if it's smarter or just, they're seeing the market do incredible, and they're not necessarily seeing the results of that in their day-to-day lives. And so I think more to it, Becky, they're seeing a disconnect between the reality of what's happening to them and what's actually going on in the markets. Especially I think where we tend to often get this fear of missing out is in some younger investors. Well, younger investors right now are concerned that maybe they can't afford to buy a house, or their rent has gone up so significantly. So they're like, I'm not seeing this, how these two things are connecting overall.
It's just that if the run continues and if it keeps going, it will win more and more converts. I guess I wonder, how does this end?
Well, obviously, if you continue to run, you always see people eventually convert. I will say the one thing for those who are in right now, Becky, that's most interesting to me, and this is the sign to me that this is going to continue for a little while, is that our percentage of clients who trade indexes and index-based ETFs versus individual names is at what I would call its baseline. You never really see it go below 30%, and that's kind of where we're at right now. So 70% of the traders are, involved with names that are not index-based, and that's what tends to keep this going because people are willing to, I had some stocks up there that Bristol-Myers is not a name, and we've seen incredible bullishness in there. They're not names that you normally see in here. It's always the NVIDIAs, the Teslas, et cetera. And so we're starting to see a lot more names, not that people aren't still, of course, trading NVIDIAs and Teslas, but their trading is not so above average. What's above average are those names out of that top 20 or so that we normally see.
You listed Chevron as one of the ones that clients are very bullish on, too. Why do you think that is? Just higher crude oil prices?
I think a lot of it. I think it's a way to synthetically play crude oil that they did not want to necessarily buy the future or the U.S., one of the ETFs or whatever it may be. So with that, they went out and bought Chevron as a stock that is, affordable.
You don't see the same in Exxon, though? It's unique to Chevron?
Not really. That is the interesting part about it, Becky. We're seeing it a lot more in Chevron than we are seeing it in Exxon, which is a little bit abnormal, I must say. Usually, actually, you see it in Exxon first before you see it in Chevron. And then you guys are talking a lot about NVIDIA today. What was really interesting, first of all, I would say to people, if you look what the options market's telling us, the options market's telling us that between now and Friday, you should see NVIDIA with about a 9% move. So I think people have to take that into account in terms of what are they willing to stomach risk-wise. And the other thing is those 900 calls, and we're trading, in a pre-market now just above 900. That was something we saw many people speculating on last week, buying those calls. Now, at the end of the week, they closed right around $31. So, that's, I guess, your break even, although you could sell it sooner, obviously, if we continue higher. But it's interesting how the stock's going right above that mark.